Hi, I'm Matt Raebel, and this is The Spread, brought to you by MyAxe. Welcome to The Spread, the show where I tell you what happened over the past week so that you can be ready for the next catastrophe. To start us off, the OCC was happy to report on October 1st that they'd hit a new personal best in September for total cleared contracts, over 403 million in total. That's an 11.3% increase from September of last year. Their securities lending activity increased by 1% as well. October is traditionally a spooky month. Appropriately, the old fear gauge seems to be up to its usual October shenanigans. October is usually the most volatile month of the year for the stock market by a wide margin, though nobody knows exactly why that is. Some think the crashes of 1929 and 1987, both of which happened in October of those years, created a sort of self-fulfilling prophecy of volatility. More recently, many say the ongoing trade war is to blame for the U.S. economy's recent troubles, including reports of weaker than usual manufacturing activity in the U.S., which was released last week. The S&P 500 saw a decrease in value late last week, and unsurprisingly, the VIX jumped, reaching as high as 21.34 points on October 2nd. It closed at just over 20 points that day, and at 21.26 points on October 3rd. It was a big bump from its already high opening level of around 16 points. When the news broke, all those options traders we mentioned last week could be heard yelling, "Called it!" around the country. Big news from some of the biggest retail brokerages in the US. Charles Schwab, TD Ameritrade, and E-Trade announced that they are all eliminating commissions for stock, ETF, and options trades. Charles Schwab was the first, followed by TD Ameritrade, and then, not wanting to be that guy, the last guy that's still charging fees for commissions, E-Trade announced the same later in the week. Although oil prices look like they've evened out a bit since the Ubkayak oil field attack a few weeks ago, the attack done entirely using a drove of drones, or maybe a murder of drones? Anyway, despite the actual price calming down, activity on WTI crude oil futures and options trading indicates a lot of traders are still nervous. A lot of them appear to be engaging in a hedging strategy called risk reversal, aka a protective collar, which often happens when the market is anticipating more volatility down the road. Will there be another spike? Who can say at this point? I'm still trying to figure out which plural word for drones I like the best. And that's going to be the spread for this week. I'm Matt Raebel, and I'll see you next time.